Hello and welcome to IB Times TV. I'm Jessica Minton and I'm joined by IB Times reporter Alexander Kaufman to talk about how JPMorgan beat expectations and what this means for CEO Jamie Dimon going forward. So Alexander, we did see JPMorgan beat expectations today, but in the last few months, a lot of people have been talking about him possibly stepping down. What exactly does this mean for him going forward now?
Well, when they had their annual company meeting with shareholders back in May, it was put to a vote, and only 1 in 3 shareholders voted for Jamie Dimon to step down from his position in what's called the Imperial CEO. So he's simultaneously the chairman of the board, and he's the CEO, meaning he's his own boss in the second position. Overwhelmingly, shareholders voted to allow him to keep both positions, and the earnings report today really shows why they chose to leave him there.
So Jamie Dimon also was on CNBC after their earnings report was released. How did he come across in that interview?
He came across as really confident. He raced right down to the New York Stock Exchange right after doing the earnings call with investors and analysts. He was pretty happy to be on there. He, in his usual fashion, the guy's a media darling, and and he, people like him because he's pretty forthright. He's very much like a native New Yorker, very honest. He was quick to say that Wells Fargo, which also had a good earnings report today, is doing mortgages better than JPMorgan, but JPMorgan is trying to compete there as well.
And finally, what does this ultimately mean for JPMorgan moving forward?
Well, JPMorgan has been doing really well over the last few quarters. They have kept Dimon in his position, and moving forward, it seems like it's more good news, assuming that the U.S. economy continues to recover.
Well, Alexander, thank you so much for your insight and joining us.
Thank you for having me.